Hello, it is the 7th of December 2010. Welcome to today's second part of the silver analysis. If you have not seen the first part, it is the long-term view of this chart within the big Fibonacci level of the 31 and a half handle. And I'm going to now continue a little further, but now work within the shorter term time frame or the intermediate term time frame as I look at it. And within this chart, we've had this pullback from these gains of over 30. It came back down to the around roughly the 2960 handle, and it's actually now back up to 30 as of 2:28 p.m. Eastern Time. It's created this lower high, and if this 30 is a high where this support happens to be, then most likely it might test the next big area, which is 29 and 1/3. It's a pretty big area. It's the former resistance that we encountered in the earlier part of November, roughly 1 month ago. And this is the line for it. It's the area where it consolidated very nicely. Now that was it was a big consolidation because at the time it had this trend line, and that time consolidation enabled it to break that trend line and have the nice surge of about 4% from that breakout. It's also a key Fibonacci within this 25 low and this top on SLV anyway. It's a 23.6 linear Fibonacci right towards here. It's the 5-day moving average. Looks as if it's going to barely go above it. And this, of course, is the key trend line. So the big level is that of 29.5. And what this means is that if this area is resistance, most likely that's where we're going. If it's not, and it can manage to stabilize, and it'll come most likely come towards this top. And if it does take it out, then 3150 is that obvious next level towards where it's going to. Now, these moving averages, the 5-day, it's continuing on. There's no big secret to how to do this. It's the 15-minute chart, so there's a total of 6.5 trading hours in a day. And if you times that by 4, being a 15-minute chart, then that would give you a number of 26. So it's 130 periods in this. So after each tick without a move in here, it goes from one digit lower. So it would go to the 129, 128, 127, and so on. Same thing with all the other ones. It would reduce one number within its time frame that it has. Now, what this 31.5 is, we're now at this 30.5. Okay, I was just saying words I didn't have to. Anyway, moving on. I was asked earlier if this is a validation. I guess I'm not sure, but it's good to bring this up. If this is a validation towards a 3140 hit, and the answer is yes. It's a pierce below as of now. Because if it doesn't hit this resistance, most likely it's going to go to that 3140 where it will probably top out and maybe come back to this level. Anyway, in 2008, we went to 2135, which was about 2% higher than its 2094 level, so its Fibonacci ended with a 2% pierce above. If this is the top, then it will end with a 3% pierce below. This is a top. This is when you look after the fact that's we don't know yet if this is a top. It's hardly been much of retracement whatsoever. Sort of like any of these other retracements that we have had. There's plenty in with market on many different levels. So therefore, this level here is extremely big. Now, for any type of progress or any type of indication for this rolling over, you need more than just the 5-day to reduce. You need, sort of like in here, what you need is when it's reducing and it has its first test, it needs to find the resistance and then break the low. That didn't happen here. And until something like that can happen, then it's going to stay bullish. Even if it breaks the 5 like it did in here, that's totally fine. You break the 5 in here, first resistance test, oh, it got above it very nicely. And as long as that keeps happening, the buyers will be remaining in control. Now, with the Fibonacci, there's going to be a lot of people who may stop buying because, well, it's up too much for at least a decent amount of time. And what they want to do is they want to wait for that correction, maybe a push down to the 20 or 50-day moving average. Maybe they want to test this volume weighted average. Maybe they want to go 38% from this high, or maybe they just pick a number like 26 or 25. That's what a lot of people will be doing before they enter in again. And what they want to do is see how this level acts as resistance, because if it ends up in a range, then they may look for a breakout maybe at 29 or 28, or depending on where the range is. And if it breaks the 31 variable, say it goes up to 35, 36, and then starts to pull back down to 31, 32, and now it's up to 33, they might start getting in again because they realize that the resistance of the 32 is that of a failed move. So that's how I'm looking at it. Myself personally, that's what I will be doing, is just that. Stop buying and either waiting for that push lower or waiting to see how it can gain on the momentum. And then if I can manage to buy on strength at around 33, 34 an ounce after it's been to 36, 37 or whatever, whenever the message of the market tells me that the 3150 is not going to be that great of resistance, then the activeness towards getting more at that price will continue. And that's just my personal strategy. Make your ideas your own, make your strategies your own. And thank you all for watching this video. And again, if you haven't seen that Fibonacci one, I liked the video. It was pretty cool. So thank you for watching. Take care.